weekly time frame, if anything is going to hold this move down, it should be this weekly stuff, this weekly FEGs. So you have one weekly FEG here, you have another one here. But usually what happens is this, you have not like what happened, that's what will happen. You have this here, there's this to break to the I mean this first one should give a decent move. It might not break to the upside, to be honest, but yeah, it should really give a decent move up.
Okay.
That's this first FEG. Now, this other one will serve later for the future, more like something like you have lower lows being created.
Okay.
So this second one, it could go up, I mean significantly up, but you shouldn't really expect this second one to go significantly up
Oh.
because this is more like you are starting to create lower lows now, right?
Mm-hmm.
Kind of then higher lows, maybe to continue to the downside,
Downside.
right?
Mm-hmm.
You understand?
Yeah.
So typically, this is what this second FEG will be used for, right? So if you want to, like the next big trade on Bitcoin, really, um, is that's why it will be very silly if you are expecting this trade. If we take this trade here, this target
Mm.
at 46,500, you shouldn't be expecting a new all-time high. You shouldn't be. Our worst case scenario, you should be expecting something here, something, you know, um, really, if I'll be honest, I'll really say the highest this thing can go this on this weekly is this opening, this
Yeah.
candle opening, this that like if honestly I want whatever trade I take, I want my stop loss to be above that point.
Okay.
If I'm to really be honest, whatever trade I take inside this FEG, I don't care. I don't care wherever I put it. Use a stop loss that can. If I'm taking a trade here, if this is it, it means just let your stop loss should be above this because this point is the opening, right? So you
Okay.
have a trade, really, you have a trade between this start of this FEG here, this weekly FEG, this is the weekly FEG, and this opening here. You
Mm.
have a trade there. Yeah. There's definitely going to be a bounce. That's where the first touch should come in.
Come in.
So anything between there. So it's just like what do you really want? The closer you take, the closer you are to the start of the FEG, the higher the chances that you are going to get filled and get into the trade,
Trade. Yeah.
right?
Yeah.
Um, the That's the payoff for getting as close as FEG is. The payoff too as getting if you want to get into closer, anything closer to this opening, right? The payoff is you get a better entry, but
Mm.
you have the risk of losing the trade,
Losing the
at least
trade.
for that first touch bounce.
Yeah.
That's the downside of it. So there is a slider. It's just more like a choice of what you want. But the worst thing ever you should ever do is if you take an order here, right?
Mm-hmm.
If you take an entry here as your order, right? And this start of this FEG holds the move right down. The worst thing you should ever do as a trader is for you to this thing bounce it down, and you see this is bouncing it down. You're already going down. It's for you to get in. Like is you are better not getting into that trade and waiting for another opportunity than
Opportunity.
just jumping in. Because what if you get in here, this thing comes here, you get in, you jump in anyhow, then the thing comes back to this point here, and you at this point, most likely you getting in, you jumping in ridiculously without calculation, you might have used 100x, thinking this thing will just continue down.
Down.
Whereas it wouldn't. It takes you off somewhere here, go and test the opening, daily opening, then start coming down. So it means you just take a loss, right? Something
Mm.
you could have just stayed off and just have your maximum account to yourself, right?
Yeah.
So whatever you take here, you should be ready to either lose the trade, get into the trade. I mean, not lose the trade. Not not get into the trade, right? So it's a risk you have to take. So you just make your choice and swallow the pill and be okay with it.
And you could have as
So
well, you could
that's
have as
just
well gotten in on the first touch, make some money, and wait. If it goes deeper, if it goes deeper to the opening of
yeah,
the this thing, then you take
exactly,
just
exactly.
like you
So
target like
really,
two trades in that
yeah,
region.
exactly. Just like target, but the only thing is the downside of that too. It has an advantage. Everything has an advantage and disadvantage. It's just like, what do you want to accept? Like, what are you willing to accept? What's the acceptance you are willing to take? Right? If you take the first bounce here, right? Good, life is good. You take out some profits between year and year is good, and you plan. Okay, maybe this thing could also still go deeper.
Okay.
Maybe this thing could also go deeper to inside of this place here, right? Before it finally goes down, right? So
Mhm.
this time now you can say, okay, let me plan for this now. Let me take this daily opening this time and put my stop loss something above here just to cover for this weak and body of this other block, right?
Mhm.
So in this case now, you still get to take if it does happen, you get to enjoy these two trades. But if it doesn't happen, well, you still get to take some profits from this first
From the
one.
first one.
So life is good, right? So at least it's at least at all, as they say, it's not bad. At all, not bad. So that's the that's exactly how to play this range here. So I think I was talking about something before. So this place here is a very good spot if you are really looking for a big trade here. So this is it. You have two weeklies. The first weekly is where we do the work. This is really of no importance to me. If going by the theory, of course, that's something that we covered in the advanced section. It's like trade the next moment. Like, of what importance is it to me putting down that FEG there? Of what importance is it to me putting this FEG, join this FEG, join this FEG? Yeah, they are data point, but of what relevance? Like, absolutely no relevance. If it gets there, good, it gets there. Like, for Christ's sake, there's nothing you can't take any trade except if you want to take this trade. You
Mm.
know, so you can't say let me take this trade, this one, and I'll put my stop loss will cover here. That's bullshit. Like, you don't really know the much of it. So this is all you need if you want to like start doing your analysis, doing whatever you want to do inside this FEG, because statistically that's what we hold it. Like, it should hold it statistically, and
Mhm.
really it will hold it.
It will hold
Not that
it,
I'm too certain.
but the probability is very high that
Is more. So
that's the
that's
point
what
that we
this
hold it.
the advantage. That's what I'm basing on. And fuck whatever everything that will not make it to happen. I don't care. I don't have control over that. We've seen thousands of these things, if not hundreds of thousands of it happening, and that is exactly the what I care about. Those variables that are known. So the thing here is, this is exactly what happened. I don't need any of those things below. So now you have now inside this daily. Now this is a weekly FEG. Let me just make it white, just because I like using white for weekly. So inside this weekly FEG, you have this daily, right? You have this daily, and you have
You mean
another daily.
inside of the weekly FEG? You have the daily inside. That this one
I
is not
mean,
inside.
yeah, you have a daily FEG inside.
Okay.
This is the first day. So inside this weekly FEG, you have this here, and you have another daily here. Statistically, this one is not relevant. This
Mhm.
is what is relevant.
Okay.
So if you want to go greedy, you have two choices now. Choice one, take something very close to the start of this weekly FEG.
Okay.
Something very close to the start. Let's even say here, right? So choice one, you take something very close, 89 for 400. Choice two, you say, okay, you know what? I'm ready to take whatever comes with it. Let me let me look a scenario where this thing deep dives the weekly inside this daily FEG and hold it. That would be a fast fucking move
Hmm.
up to the upside, right?
Yeah.
So if you are playing that, right, in this place, so you can play this. So if I would if you, it really depends. If you be using these two trades, they are premium. To be honest with you, there's
Mhm.
nothing wrong with the two trades are premium.
Yeah.
It just depends. One might happen, the other might not happen. So which one will happen? Honestly, I don't know. But you have a choice. Choice one, take the two, right?
Okay.
Take the two. Choice one, take the two. Take take your entry, put your entry here, right? Um, put your entry here. Like I mean, this as an entry. Put your entry here. Take the two. So just so you don't miss out, you don't get to me. Oh man, I didn't take the first one, and it was the first one that happened. Take this is entry. So just make sure your stop loss is somewhere below this one, right?
Mm-hmm. But
So
the
this
gap is
case,
much. 89 to 85K.
let's check. Hold on. Oh, the gap is fucking much, man. So it means you can't use salt. So just use something, not that too large, right?
Yeah. If you lose it, you lose it.
Just use,
That's just it.
yeah, exactly. That's it. So you are just trying to check because it's statistically something that will happen. Like it will happen, not even so usually you have two trades inside. You might even have more than two trades inside this FEG set. Like so take this. If I'm trading this thing, to be honest with you, this is where I'll put my entry. Yeah. Somewhere here, that's where I'll put my entry. Then my stop loss. Let me see. Let me see. There's a little basis for setting my stop loss. Just go a little bit lower. Maybe I'll just put my stop loss somewhere here. I'll take my entry here. I'll put my stop loss like 1.5.
Yeah.
Yeah, this is 87,388. So my stop loss starts by my stop losses. So 87,388. 87,388. So this is my stop loss for the first trade. I'm taking the two entries. So entry one, stop. So if this first one works good, life is good. I make some money. I get out of the trade, right?
Okay.
Fill me in, get in, make some money, get out. Now, Now, if I will be looking, oh, this move can start a new all-time high, we can come to a new all-time high, then usually I should be looking at this, I should be looking at a deep dive inside this weekly
Inside
FEG.
this weekend.
Because you can hold here, come back here, hold here, come back here, before you eventually come here and start going. You don't know exactly when it's going to happen.
Happen.
This FEG might hold for 1 month plus.
Yeah.
You don't know. Don't know. So usually look for a deep dive inside this FEG if you want to look for a bigger move to the upside. Then. So that's that for that. So I think we'll have a trade somewhere here, and that's how to play it. It's more about risk analysis. We just did some risk analysis and trade entries and all. So and also some out of taking profits. So you know what? Let's just look at where this thing happened, like back when it happened. Let's look at this range here. So if you look at this range here, maybe I just take out all this. Let me just take them out. So you see that all this I'm taking out now, they are refugees.
Mm-hmm.
So what do we have here? Um, in here, in this leg here, you have this massive weekly FEG.
Yeah.
And that's the only weekly FEG you have, really. Where you can say there are other weeklies FEG too. Like you have this, you have this, you have this. But this first weekly FEG is really the FEG you should be looking at. And that's exactly what's happened here. So you see the move here. So let's look at these micro ones that happen. This micro, let's see. Let's see if there's something inside the deal. Okay, so this side, let's analyze this side. So we have looked at this. So you observe this leg too. Here, what do you have? In this current leg, you have daily FEGs, daily FEGs, daily FEGs, right? But what happened? Which one? This is the first one that was used.
Mm-hmm. Yeah.
Are you seeing it?
Mm-hmm.
If you are going up to the upside, that should be the first one. So this was the first one. So imagine you were here at this moment, cut this out. You are here at this moment. You are thinking, cut this whole part out. Cut all this out. You are thinking, where will this one go to? Oh, will it go to? I want to get something better. I want to get a greater price. I want to get well, why that is good, but statistically, does that hold like does it hold water?
No.
So if it doesn't hold value, it means you shouldn't be looking at that. Right? It's not just about having a better like what do you mean by better price? Better price is not greedier price. You should be looking at better price, not greedy or something lower price. No, it's not about lower price, it's about better price, right? Better price is something that has statistical advantage. Why this a price here is lower, but I tell you for sure a price here is better. This is better. This is lower. So, so what do you go for? Lower or better? It's better. So you have 12 edges here. In fact, you have three sets. So let's just see. So let's see lower prices. Lower. So it's not all about lower price. Oh, I need a lower price. Yeah. In the traditional system, that applies, that works. But how low can it go? Do
How
you know how
low?
low it
You
can
don't
go?
know. That's
It
just
can
the truth.
always continue going lower. So where exactly would be the lowest possible point? You don't even get to know because when it has gone low, you think it will continue doing that way
Uh,
until
it's
the
just
moment you think it will continue doing that way, that's the period it start going the opposite way in a big way. Just like what's happened on Bitcoin.
we
Just
have
like what's happened on
we
Bitcoin.
have a student. We just continue doing what we are doing. Please don't change the subject.
Okay.
Mm.
So just like we have on Bitcoin, you could remember back then why we we were watching this thing. We were thinking Bitcoin is going to 5K, right? That was
Yeah.
exactly what we had. Oh, Bitcoin is down 5K. It's almost inevitable. It's almost inevitable in Bitcoin, right?
Yeah.
That was this moment.
Hmm.
So at first we're thinking Bitcoin has to come and test 12K, 10K, 12K, 10K thereabouts. So we're thinking of 5K to be honest. Like Bitcoin is gonna get to 5K, right? So we're not surprised about the dump, about the massive dump. Yeah, we're not surprised about this, but we're thinking Bitcoin is coming here. But to be honest, yeah, that's the thinking, but it never does that. It kept going lower, going lower. At this point, at this point, people will think, oh man, this thing, Bitcoin is dead. That's all for Bitcoin. Get out. Continues like, get out, get out. When the moment people start getting out, that was exactly when the FOMO is too much, that's when you see,
Yeah.
start moving in the opposite direction. So it's not about lower price, it's about better price. Like, I think anybody here should start removing that taking away that lower price in this trading space, start replacing it with better price. So that's just
The
that for
most
that.
price
So
that is backed by the most price that is backed by data that is reoccurring and
yes, the
reoccurring and
most price that
reoccurring.
is backed by data, that's better price. That has a statistical advantage. That I mean, over thousands, if not hundreds of thousands of sample data size that proves true, that has a higher um success rate. Yeah, success rate. So the data set is exactly what makes a better price. Just for those that are coming in, what we are looking at shortly is we're looking at Bitcoin getting to as the next target. We are looking at Bitcoin getting to 103
Hello, Job. Can you hear us? Hello, Uche. Welcome. Good evening.
Good evening, brother.
Yeah, good evening. How was your day?
Sorry I came late though.
Oh no.
I was caught up with something after by the time I wanted to join.
Oh,
And
okay.
I didn't have a time to even join immediately, so data right, so I had to buy and
Oh,
come in now.
so sorry about that. At least it's
Yeah.
good. The
But
effort is there.
this class will be dropped, Abby.
Yes, it's recorded. It's recorded.
Okay, okay, okay,
No, no,
okay.
this particular one, no, might not be dropped because we are doing something really advanced here.
Oh,
Yeah,
Okay.
yeah, yeah. This particular one might not be dropped, but it's going to be for the benefit of anyone who joins, like you. But we are not going to release it anytime soon. Job, is that also?
That's true. Yeah, it's true because I don't even think a beginner will really understand what we're doing here.
Yeah.
Just for the sake, people didn't connect on time, so we're just doing some very interesting stuff right now. So, like I just shared the target, right? Which we're taking. If it does hold the 96,500, will it happen to hold? I don't know. I don't care if it happens. If it if it gets there, I'm going to take a trade there. That's all I care about. But we are looking at Bitcoin going to what 93,000. That's the next target, right? Yeah. So we can break up right now. I don't know if we break up. So I have two choices now. It's either if this thing breaks up right now, this is step one. First step is if this thing, if it comes back here, it can don't we don't look at candles here. I don't care about candles. What makes you money is the chart architecture. That's what makes you money. The candles, money flow are created by like money flow, they are created by the candles, right? Money creates candles, but the chart architecture makes the money. Like that's a very huge mantra. That's a very huge mantra. Um, when it comes to trading, right? Um, Money creates the candles because each candle you see, each candle movement, for every movement of Bitcoin's candle right now, it's money that is involved, right? Some demand and supply are involved, right? But what makes you the money is not the candle movement itself, it's the chart architecture, right? So that's what makes you money. So I'm looking to take 96,500 for a long to the upside. Might really be a swing trade. I don't know. I might take profits. I don't know. But really, I'm looking at using a smaller amount size because I'm looking to swing the trade to 103,000 Bitcoin. But if it doesn't get there, if we break up to the upside, if we don't come down here, right, it's okay. If we break up to the upside, then I'll look to retest this. I think probably we might this region might do is it's something like we break up here, we come back here before we eventually come here. So those are the two possibilities that could happen. This is possibility two. We break up this point. It's just a support, a resistance zone. Like, it's a common thing in the trading space, right? Where you break a resistance. This is a resistance. It's not rocket science. You break resistance, then you know over time resistance turns support, right? Um, Whatever holds the move can break the move, and whatever breaks the move can hold the move. That's that's the theory. So you break here, go somewhere here, back test, then take it here, right? So this is scenario two. Why scenario one, which I'm looking for any of those two scenarios, I'll be trading them, is we come down here. We come down here. Sorry, I'm using my tab. So we come down here to this point here, which I'm expecting. I'll be using a smaller amount to take the trade because I'm looking to swing it. Um, so we come all the way here to 93,000. Yeah. So I'll be taking a trade on 93,000. I'll be taking a short there for quick gain, right? But you just have to make sure that your stop loss, that's something I was talking about before. Your stop loss, you have to make sure that your stop loss is above, like it's a must that your stop loss is above this daily open, which is 104, 460, 104,460. Your stop loss has to be above that point. Yes. So anywhere between the start of this point anywhere between 102 756 and 104 460. There's a trade here on Bitcoin for a short. Because a decent sell-off is going to happen in this place. Yes. In
Hello? We lost you, Joe.
that point. And that's exactly what's control zone, as you might call it, any way you call it. The more the effect you see on the chart, in the market in general, right? So that's so there's a trade here on Bitcoin for a short. Like something very interesting will happen here. I don't know how large it's going to be because you can't control that. People that have the money, what will determine that? And then, because of the chart architecture. So I will be taking a trade here. My call out is this 93,000. Let's just say 93,000 flat.
103.
Yeah.
103, not 93.
Sorry, 103, 103,000. Yeah, that's the call out. Then the stop loss should be above 104 460. Let's just say it should be above 104 400. So this means if you are taking the trade on something like MEXC, for example, which is an exchange, 103. This means, okay, so I think I can use, this is 1.5%. Usually I use 50x. Rather, I can use 100. I use any leverage. Like I use variable leverage. We can use up to 100x in this, we can use up to 100x in this. We can use as low as 20x. We can use as low as 25, 50. It's a variable, it's a slider, and you have to work by that. You don't have to be static. Oh, no, 100x is risky, it's gambling, it's for professional. Nobody even use it. Don't use it. Please stay away from it. Even if you go to any exchange right now, if you use 100x, anything above 20x, I think, they will say it's high risks, or 25 thereabout. They say it's high risks. They will even discourage you from using it, right? Well, yeah, it's okay to discourage, but there's a better way to play it. That's the honest truth. So my call out is 103,000, and my stop loss should be above 104,000. Let's just say 500. So you know what? Let's do it now. I'll be using this place for a stop loss. I'll be using you know what? Let me just use here. I really want to use 105. You know what? Damn it. So 1.7. So with 1.7, oh sorry. With 1.7. So please, you can do the calculation for me. You can times 1.7 times 1.7 times 30. What does that give you, please?
51.
51. Okay. So 1.7 times 28.
47.6.
What's that?
47.6 times 28.
47.6. Okay, let's just say 25. So fees. What's 25? 25 should be like
42.5.
40, 42.5. So anything between 25, 25, 26, 27, let's just say 20, 26, thereabout, 26x. So the leverage is going to be, where is that to again? So the leverage on this trade is going to be leverage. Okay, you know what? Entry is, where do we identify as entry right now? That's 103 flats, 103,000. Stop is going to be please, what's the stop price again? That's 104 750 thereabouts. 104,000, 104,000 750. 750. What else? The leverage is going to be 20, let's just say 26x, or leverage. Leverage is going to be 20, or you know what? Let me 25x. I really don't like using 25x, but it's okay. It's for the safety of all. 25x. Then your risks, you have to do your risks properly. There is a much deeper layer to risk. I think I won't be talking about that for now, but just use something you can afford to read. So that's a short call out I'm giving right now. So for the long call outs, uh, I already analyzed it. There are two possibilities. You can break up right now. I don't know if we will. Um, so if we, this is the only call out I can give for a long right now, and 6,500. That's the target. Um, so let me do this. Um, it might not even get to this 6,500 to be honest, but I think I would rather be very safe, especially because I'm giving this call out. We'd rather not get our entry that rather than I would rather miss this trade, right? Instead of getting stopped out. Yeah, I'll prefer, oh, I didn't make money, but it happened, rather than, oh, I lost money. What kind of call out did you give? R2M Trading Institute? You have made me lost my entire money. So 96,500. Sorry, 96,500 as entry. Stop loss. Um, so stop loss. Um, hold on a bit. Stop loss should be a little bit below 95,580. Should be a little bit above 95,580. So let's just say somewhere here. Yeah, somewhere about not bad. So what's the stop loss for this? So please multiply for me 1.2. 1.2 times 1.2 times 45 was what do you get?
1.2, right?
1.2 times 45. What do you get?
54.
You said what?
54. 54.
54. Okay. Make it 40, please.
48.
48. Okay. So I rather use like 37 thereabouts. Make it 37. I just want to cover fees.
38 is 45.
Good. So we are
45.6.
using 30. We are using 38x. So because fees, depending on the exchange, like BitGet now, they have a very high fee. It's like 4-5% thereabouts, which is very ridiculous. 95,370. That's the stop loss. 35. What did I just say? 90, is it 95,370? Oh no. Oh no. What did I just do? 96,000. Sorry. 96,500. Sorry, I'm using phone. That's why that's not really too good, but 96,000. 96,500. Yeah. So this top loss is gonna be um it's gonna be 95,370. 95,370. So the leverage is gonna be, we're trading this on exchange, not broker. Also, exchange is like Mexi Bitget, not broker. This is not broker. If you want to trade on broker too, there's a way you can do that too. Leverage, what do you get? 30 what?
38.
38x. So this is a 38x. So 38x leverage. This trade, 96,000, I'm looking at it getting to 103. Yeah. So there's a word to a stop test at this region. I'm right here. You can stop here. So if we break out of this point now and stop here, I'll look to back test this. So this point will be my trade. Here will be my trade. That is if we break out
Yeah.
without coming to test this, then this is where I will just adjust my trade. So, but I can't give that as a call out because that decision has to be made in the moment. It has to be made in the moment. So, this is the call out. Anybody that wants to screenshot it, so you can do all the screenshot. So let me just give you a moment. Oh, sorry. Let me fix this. Okay, yeah. So, if you want to screenshot, you can screenshot. I'm saying that this president to 103,000. Can 101 region, 300, 500 region, 101, 500, 101, 300 region can stop it first as a replacement. But I strongly don't think that would be the ultimate. So I don't think we are going down anytime soon. Will we make a new all-time high? I don't know. I don't care. So if you have screenshot, that's good. So I'm done with that. Now we can look at the next thing. Sorry. How do I get that? So that was it. So back to what we are saying before. Back to so let's look at this range. We're looking at this this so you see here on this line,
Your voice, Job, is not stable.
so can you hear me now? Is it clearer now? Please, if anyone can hear me, you can just
We can hear
mute
you,
yourself
but
and speak.
yeah, it's better now. Speak, please.
I need someone else to confirm.
Yeah, it's Annie. Can you hear? Can you hear Job? Uche.
Okay.
Not so
So
very well.
But what about now?
It's better
so
now. It's better now.
okay, it's better now. Good. So now
Mm.
what we are talking about, I hope you took a screenshot of this, please. So
I
that's
don't
it.
know if this class can be recorded at least, but maybe you can put me through. I don't really understand what is going on, but um, it's very fun looking at it anyway.
Yeah. It's more of an advanced take. You can just have a flow along, right? You get there, we'll get there. It's really more of a professional take, really, to be honest, or an advanced. I don't know. There are many concepts that will be discussed, like gaps, understanding of gaps. Those are some of the reasons why I knew that. There are more reasons why I know we are going up, right now, than we are coming
Okay.
down. A lot of stuff, like it's just clear. But who knows? It might not go up. I don't know. I don't even care if it doesn't go up. That's the funny thing about trading. Will it go up? Oh no, he gave a call out and he failed it. Yeah, I love to see this. They are all faked. I don't know. I don't care if it's gonna go up. But does it look it's gonna go up? Yes. It sure looks like it's gonna go up statistically. But will it go down? I don't know. I don't care. If it goes down, if I take a loss, I'm not gonna die. I'm only using a fraction of my fund, of my total fund to take the trade. So if it doesn't go well, good. If it goes well, good. So nothing will happen to me. I'm not going to go broke if it doesn't go well. So just so you know, for any of those that might want to take a huge part of their fund, take the trade. if you do use a huge part of your phone and take the trade, if it works out, please share out of your profit with me. So that's all I can say. So we have not discussed risk analysis. There's a deeper level to risk analysis. That's the reason why we really don't give call out on the platform, because we don't want people to lose their funds, right? Um, there's a deeper level to risk analysis. If we would have been dropping call out on the platform, for some reasons we don't want to. So let me just continue with this point. So if you realize when Bitcoin was at 56,000 thereabout. So if you look at this range, this first gap was okay. Um, so let's look at this point where we stopped. So this gap was the first gap that held it, right? This point here was the first gap that held it, right? And it was a massive spring up. If you look at this is exactly the same thing we are expecting on this call out here. On this call out here, it's kind of really the same, very similar to what we're expecting here. Just look at it. So it's very, very much similar. So I don't know. Only a trained eye can see that. So so that's it. So now if you realize this was the gap that then in the future when we came back to it, on Bitcoin, right? What happened in the future? What happened? It simply came back. First, this was the gap that took it high above, right? So I don't know. In the future, it came close. It never came to that gap. I don't even know what held it there. I don't know. I don't care. So, right, came here. It came back to the gap again. All right, held the gap for God knows how long. Come back again. Then what happened? It tries to hold the gap to here. Look at it here. It tries to hold the gap in here, right? At this point, it tried to hold the gap. Look at it here. Somewhere there, right? It couldn't. It lost it, right? That was a massive move up, though, just so you know. I think this is a daily time frame. Then it went straight into this gap. It went straight into this gap. Right? It went straight into this gap. See? It went straight into this gap. So that's exactly what happened. So the next time too, then this gap too, let's see. In the future, it went straight inside this gap. I think this gap must have tried to hold too again. Yeah, you see, this gap to try to hold here. Look at it here. It's very interior weak. The gap tries to hold, but yeah, it couldn't hold. It lost it in a massive way. Then where did it go to? It went straight to this next gap. Was that it? Yeah, exactly. It went straight to this next gap. You see? So it had a massive move up, came back again and tested the gap again before finally, zooming up and up it goes. So that's it. Now, interestingly, this one too, it came to not inside. Okay, fine. Before I talk about that, you realize what happened here. This thing was testing these gaps, tested this gap or here, created a low, or you know what? Let me just make it here. Let me make it the last test. Created a low here, tested the gap, created another low, tested this next gap, created another low. Then, so if you observe, as it was testing this gap lower, it's creating new lower lows. This one too tested another. I think it tested a weekly gap. You know what? You can just take a look. So it's all gaps. Yeah, look at the gap. It tested this gap here. just off of this other block. So he tested this gap. Then, spring up like massively off of this other block. Yeah. So that was the test. So spring up massively from there. Up we go on Bitcoin. So that's exactly what is happening. Like it literally happens every time. Look at it here. Just look at the same setup we are looking at. Something very similar to this. Is this not it? Like this is a weekly time frame. Just look at this as if it's the Christmas range. I call it the Christmas range. Then what happened next? What happened next? It came into this gap here. Then what happens from there? Fires up like hell, like no man's business. So if this was the Christmas range, then you have so the same thing. That's exactly what's happening here. Or what could happen? Will it happen? I don't know. I don't care. So that's exactly what could happen here too. This is the Christmas range. Call it the Christmas range. So this is the Christmas range. So we can come here then before we fire up.
Go to the
So
go to the weekly time frame. Let's see if there's a weekly time frame, just like December of last year.
if there's a weekly time frame, what do you mean?
So if there's a weekly gap, I mean to say, just like last
What
as a weekly
just like
last year, December.
I don't really know about that. To be honest with you, that would take me a lot of time. If I was on
No,
system,
no. I said the current move right now, the Christmas range that
okay.
I've talked about, has a
Oh, okay.
weekly gap be created? Is there a weekly gap?
Oh,
Last year, 2023, a weekly gap was tested before they move up. So, if something similar plays out this year, then we should be looking at a weekly too. Maybe for the ultimate move up.
yeah,
I know it doesn't just work like that, but
yeah.
it-
It's not
but
impossible.
it's not
It's not
impossible too.
impossible.
Yeah.
But yeah, it's not impossible. But one thing is, it can't be too obvious. If it's happening, if the same thing is happening every December, please a minute. If the same thing is happening every December, right, it becomes very conspicuous and everybody gets to, at a particular, everybody gets to see it and it becomes, oh, this is. So I think we are seeing the move up right now. So what is happening right now is this. I don't know if this is, if it's going to fire up right now. I don't know, but it could, it might not. But if it does fire up, what we are seeing right now, in an application layer, what is happening right now is that you are having a buy. You are having a lot of buying. So if the buying pressure comes in, right? If a lot of buying pressure comes in, this thing, of course, what happens when you have too much demand? What happens? The price automatically shoots up, right? The value of the assets goes up, right? That's what is happening. So if a lot of buying comes in here, I mean, in the hundreds of millions of dollars, right? If they come in here, you're just going to see this thing going to fly up, right? But if it doesn't come in, well, good. It means this movement up will not succeed, which I really hope it doesn't. It comes here first before going up. But I can't control if it will or it will not. Right? I can't control that, and I don't think anybody can control that really. So yeah, I don't care if you're a billionaire. I don't think you can control that. You can have some, you can make some alteration, right? But you can't ultimately do much. Even if you're a billionaire, you can't do much. Yeah. If not, I mean, to make billions of dollars in trading, it comes with skills. It doesn't come with luck. So you're not just going to risk in a million, I mean, $500 million just because you want to catch fun or just because you want to liquidate some people or just because you want to pump the ball for Christ's sake. It doesn't just work that way. I mean, so there's a lot involved. So that's it. So I think I'm done right now. You can share your screen and talk about
One is almost 9. It's almost 9, Joe. It's almost 9. The class will be ending any moment from now. So basically, we will continue. We will continue sometime maybe on Monday or Tuesday next week. And if we have time on Saturday, there will be a live class. There will be a live class on Saturday, but we will pass the announcements to the group as to the timing on Saturday. We get to see. Live classes are just exactly, it's a replica of what has just happened now. We get to analyze, you get to ask questions, you get to identify some stuffs, you get to see some logic flow and things like that on the chart. So basically, that's how it works. So for Uche, yeah, you might not understand exactly or completely what is happening, but believe me, for the fact that some of us can understand it to some extent, then I don't think it's something is you. I don't think it's something you would not be able to understand. It just comes with time and little practice, and as time progresses, maybe more practice, and as time progresses, maybe trading demo account to see how this thing works in the real time, in real time and all of that to boost your courage. Today's class originally we were supposed to go through setting up your account uh, through some a broker, Xnex broker. We were supposed to also talk about how to get trading view application on your phone, on your laptop. uh, that's in addition with the curriculum, the subject that originally we had scheduled to discuss today, but it appears that a lot of the students were busy today and they were not able to join as we hope they should have. But notwithstanding, whatever was not discussed today will carry over to next week and we'll see how fast we can go so that we'll catch up with you know, we'll follow up with the curriculum the way it is outlined there. So for Uche who was able to join, thank you very much. I hope that you were able to get one or two things. Yeah, one or two things, not necessarily meaning that you understood exactly what we did, but at least you got an insight into the life of a day trader every time they pick up a chart and try to analyze. It's not as easy as people look, make it seem. At the same time,
Sorry, I don't know. Are you done speaking?
no. At the same time, it's not as complicated as some people make it to appear to be. But it is work, it is job. Analyzing the charts, trying to extract, trying to deduct, you know, data from this point and make decisions. It's not an easy because it's a decision that will influence if your money will remain in your pocket or if your money will go to someone else, like a transfer of your money or somebody else's money being transferred to you. So
Mm.
that is how it works. So for now, we'll just keep it like that. So Joby, you wanted to say something. Hello, Job.
I wanted to ask if the person, if the student connected here, if he has any
Come again. Your voice is not audible enough.
question. If the student connected, if he has any question or if she has any question.
Yes, I was about to
Okay,
ask
okay,
that.
okay. Um, I think Rome wasn't built in a day, so I'm trying to put pieces together. I think I've been able to learn at least one mantra that money makes or creates candles, but the chart architecture makes money. So knowing the elements to watch out for is a big deal. So with time, I'm going to know how to connect the dots, and so it's just even if I don't understand anything today, at least I am able to take home one of the principles. So with time, if I with persistency, I can be like one of you. So thank
Yeah.
you. Mm.
All right, thank you for that. Yeah. All right. What about when we were learning of APC?
You are not audible,
Um,
Job. You are not audible.
can you hear me now?
No.
Am I audible now? About now,
Yeah.
I'm audible now.
Yes.
Yes, yeah.
Okay. Okay. So I said everything we talked about. Like, there are just quite a number of pieces to the puzzle. So once you can identify, the pieces by names, right? Then the next thing is how those pieces interrelate, how they intertwine, right? So when you learn the basis of how they intertwine, right? Much of this thing will be gained through experience, right? Experience on the
Mm.
chart yourself, through failures, through repetition. Over time, you create an instinct. Over time, you just get to know. Like I gave that call out right now. I'm not saying, I gave you an entry, I gave you a stop loss, I gave you leverage. It's something you can hardly find in the industry, right? I'm not saying I'm a billionaire, right? But I know that's my goal, to make $1 billion. But the thing there is, you hardly can find such a thing. Most people will tell you, this is the entry. Okay, I'm looking at to buy in this entry. They hardly would they give you stop loss, really. And hardly would they even tell you what leverage to use, or maybe 5x, maybe 2x, maybe 10x. I don't know. I don't think anybody use anything above 10x. Maybe some people do. I don't know. But I'm not saying I'm not trying to overrate myself though, but I'm trying to tell you that in this institute, we are going to give you everything you need, like not hiding anything from you. That's just the point. So we'll give you all the pieces. We'll tell you how they intertwine. You have to create your own experience too from the chart. You see it yourself live. We'll trade with you live, right? We'll take real positions. I mean, real money positions, not just demo, right? Um, we make losses, we make profits. So you come to, so that's just it. So just be rest assured that you will learn as much as possible for you to start making money. But the only obstacle you have is yourself. You will be your biggest enemy in this game. You'll be your biggest
Unfortunately, that's the
enemy.
reality.
Unfortunately, that's the reality. That's how it works. You'll be the only thing that will be hindering your progress.
Progress.
It's like they say your enemy is somebody of your own household, right? It's unfortunate you'll be your own enemy. That's the funny thing. And you will know. Like they don't need to tell you. You will know yourself that, oh man, I'm stupid. Oh man, I'm foolish, right? You will know. You tell yourself. You realize, like, how can I be a hindrance to my own progress? Like, how can I be? So that's why psychology goes from basics to advanced professional level, right? It goes much deeper. If I were given an opportunity to start all over again my university period, I would go for psychology. Like if I want to read any other thing in university, it's going to be psychology, like human psychology, right? This is because of about 5 years of experience, right? That's the reason why I would like to do that. So I don't know. Mr. Annie, the name sounds more like feminine. I don't know, but that's all we have to give for today.
Okay, Annie. It's Annie. 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 It's not Annie.
Okay.
Thank you so much. I really appreciate this opportunity. It's something that is not common everywhere. It's not common. I've attended some classes, but this is way different from what is regular. And I really appreciate this opportunity. And I won't take it for granted. Thanks so much.
You're welcome. Okay, so I will be ending the class now. First, I will have to end the